So give us your take. You know China so well. What is going on?
Great. Delighted to be back, David. So good to see you. And yes, it was only in 2021 that China actually was #1 in the world when it came to direct foreign investment. And now we are seeing a decline. And this is around a number of factors, foremost being confidence in Xi Jinping and his administration's economic and financial policies. There's tremendous concern about the ongoing drags on the economy around the reduction in consumption, the inability to stimulate growth through further government investment given local debt levels, the inability to stimulate the economy through massive exports given that many countries now are watching very carefully what China is doing with its oversupply, and the real estate market continues to be a drag on the economy. And that's putting aside, of course, all the geopolitical issues that they're facing now, as well as the issues around this move that Xi Jinping has really engaged on preferring national security to economic policy.
Yeah, and particularly making a drive here against some of the people who have been most successful and wealthiest, which has interjected, I think, a degree of uncertainty for those people who want to really be the Jack Ma's of this world. It's not such a happy place to be necessarily.
That's very true. I mean, you can see it from the statistics that actually have just come out about venture capital, where just in 2018, there were over 50,000 startups in China. And last year, it was a little over 1,000. And they expect that number to even drop this year. There's a concern about investing and the access to capital, but also it's just the overall drag on the economy and these concerns about the continued insertion of party values into innovation in the private sector.
Is there any indication that President Xi might back off of that? That's really been very central in recent years to his policy. Is there any chance he might actually tack a little bit away from that direction?
Well, that's really the billion-dollar question, isn't it, in terms of where we see China's economic future. We have not seen Xi backing away from this emphasis on national security. There are all kinds of examples that we can cite related to that. What we have seen is they've been on a real charm campaign with international business. They've been sending delegations over here. They've been meeting with a number of Western companies to encourage them to continue to grow. They've been engaging in some market opening and reform to welcome the foreign firms and make it easier for them to do business. But the overall atmosphere continues to be one of concern, first, of course, because of where the economy is going, but to these concerns that American companies and European companies have about the focus on national security.
There's a host of factors, it appears, going into this, but how important are the trade issues, both with the European Union and the United States? Because there are real issues here. And by the way, going back to what you were talking about, national security, to a large degree, the Biden administration has made it sort of a national security issue.
Absolutely. I mean, we saw this begin under President Trump and definitely be continued with President Biden, and whoever wins in November, I'm sure will continue this trend where trade is no longer looked at as a way of opening markets and promoting reform, but in many ways it's a tool to influence policy. And so we see it as a negative tool to influence policy. And as China continues to grow and try and grow in areas where the United States or the Europeans might have concern, whether it's in climate technologies or if it's in artificial intelligence, we in the West have been much more sophisticated in how we've used our trade tools to close our markets and attempt to slow China's growth in those areas. So I see this definitely as an ongoing issue. And it not only affects it substantively, but obviously it affects the whole atmosphere for companies willing to do business in China. There are many, many sectors and many, many opportunities still. You'll hear the Secretary of Commerce talk about the fact that the overwhelming majority of our trade with China is benign. And we should continue to still engage with China. But the willingness of many of these companies who hear what's happening in the market are concerned about the future of the overall relationship and what it means for them to be able to do business in China has become, a real weight on their willingness to start to export or invest in China.
Here in the United States, right now, we're all fastened on the presidential election. And as part of that coverage, we spent a lot of time talking about the team around Vice President Harris, if she were elected, or the team around Donald Trump. What's the team around President Xi when it comes to economic policy?
That is actually a really good question. President Xi has brought many of his longtime loyal allies with him into the most senior positions. And many of them come from great expertise in provincial background, but are not as strong as previous administrations have been on international experience. If we even look at in the financial sector, the two people who lead the financial sector and the financial regulatory body, the Premier Li Qiang and the Vice Premier He Feng, have no financial experience, certainly not internationally. And the top regulator, the head of the People's Bank, is actually not even on the financial regulatory body. And we've seen sort of a systematic sweep against moving out many of those experts in the financial sector who were educated in the West, who actually have been part of China's integration into the international financial community being moved out, and provincial financial leaders being moved up and into office. Maybe that's a reflection of where China sees its concern. Obviously, with all this local debt, it continues to be a big concern for the government and a drag on the economy. But it is a bigger concern as we look internationally in China's continuing important role in the international financial community.
And that's in the public sector. There were reports in Bloomberg this week that there have been actions taken by the government against some leading investment bankers, actually, over in China, where they're being detained or their passports being taken or whatever. What is the chilling effect here on the professional bankers, as it were, in China?
You know, China is engaged in several anti-corruption campaigns and several waves of anti-corruption campaigns, both in the financial sector and others. And it has been of concern. We see it in the financial sector in terms of even for Western companies, executives who are willing to relocate to China. You're not getting necessarily the best and brightest. In the past, it was often a path to promotion. Now it's being viewed as China for China, and China is an island that's unto itself in the financial infrastructure of many of these investment banks. It's been a chilling effect on the venture capital. I already cited some of the statistics, but we see many of these VCs moving offshore or looking for investment overseas. So it does have a significant effect, and particularly if they're going to arrest or detain local entrepreneurs, it just further adds to that concern of the willingness to go into the private sector and start your own companies. And that has a real effect on the overall economy, because if SMEs account for 60% of economic growth, 80% of urban employment, and about 70% of technological innovation, it's going to be very hard for President Xi to turn the economy around if we don't see those SME numbers growing.
And finally, Deborah, trying to see it from President Xi's point of view, is it possible he's saying, well, listen, you in the United States and Europe think it's all about you. It's not. There are other places in the world. I can do business in Southeast Asia. I can do business in Latin America. I can do business in the Middle East. And maybe that's where his emphasis on, and maybe he doesn't need the United States and Europe quite as much?
Well, certainly we've seen a pivot away from the U.S. and European markets. Ours are still the biggest markets, and it will be hard to replace that with growth in the Middle East and Latin America and Africa. But we've definitely seen increased interaction. In fact, the premier of China is in Saudi Arabia as we speak. And we've seen an influx of Chinese companies into those regions. So they definitely will need to build that out. Obviously, there are other underlying reasons and even justifiable reasons at some level why China has been engaged in some of these anti-corruption campaigns, breaking up big tech monopolies and other things like that. It's sometimes that they go a little too far, and it has a spillover effect on confidence.